Rohr here with an early global view on Monday, January 26, 2015. It is currently 7 o'clock U.S. Central Time, and it's been quite a week from last week, which is why we're providing another global view even after Fridays. And essentially last week was central bank-orama, just major cannon fire on all fronts. So where does that leave us in market terms? And we're going to begin as usual with the short-term charts of the S&P 500, 60-minute on the left, 30-minute on the right. And as you can see, anticipating some of the less than positive influences, aside from the central bank QE efforts, and we have noted in a couple of significant commentary posts last week that we are looking at the degree to which the QE may not accomplish what everybody is hoping without political reform. The problems now rest with the political class, and our Monday part 1 and Saturday part 2 of Its Lack of Reform, Stupid might be worth a read if you haven't done so already. However, for right now, that's of course at www.rohr-blog.com. And for right now, what we had was overnight trading on the worries over Greece that saw this drop down to the 2026 level, right near the 2025 Fibonacci and interim congestion we focused on a lot across time. And then we saw the market rebound now to where it's only off about $1 or so on the day or a couple bucks on the day at 2041. And that's not surprising because quite a few people are thinking if the anti-austerity party does manage to engineer some sort of debt forgiveness for Greece, that would be an interesting model moving forward that would speak of greater strength for the equities. Of course, that's a long and rocky negotiation, so we'll have to see what happens there. But for right now, market ratcheting itself above the 2050 resistance, which you saw it failed at so badly last week, Tuesday, on the higher opening, also is... not last week, 2 weeks ago Tuesday on the higher opening. It got up to about 2060, got just short of it, and then failed again, and that's going to be the important higher resistance for now. There's further resistance up at 2070, but that's interim. If it's good above 2060, it might more likely go to 2078. If it weakens further, of course, 2025. Then even bigger supports down into 2016 to 13, which we have been focused on for some time. Again, on the most recent upbreak down near 2000, and the big level down at 1985 to 78, all still stand. That's pretty much it for the short-term view of the S&P 500.